right, what's going on, everybody? Wait for a couple of people to get on here. I'm about to go live. The topic I'll be talking about today is, I guess, the different types of investors and crowdfunding space, I guess you can say, and that whole space, and I guess like how it all works. And then where would you possibly fall in line at Craig? What's going on, man? My boy Craig, man, you solid with me, man. You always showing love. I appreciate you, brother. Let me see. All right, we got 3 people on here. Who else is on here? What's going on, everybody? What's going on today? I'm going to be talking about our crowdfunding platform, but within the crowdfunding space and the VC space and all that, what are the different types of investors when you're talking about raising capital to either buy properties or buy companies or things of that sort? I'm going to go into depth today as far as how those different things work and how that all come together, and then where you may stand within that industry when we're talking about business acquisitions or the buying and selling of companies and businesses. I know a lot of us are very familiar with buying and selling real estate, right? We all know people who invest in real estate, have their real estate license and all that good stuff, and real estate brokers, which is very normal and typical, but not too many of us know people that buy companies and sell companies, mergers and acquisitions to be specific, other than what we see on TV. So today I'm going to kind of touch up on the different ways and the different types of investors in this space. We got a lot of people coming in here quick. Okay, cool. Let's see who we have. TL, what's going on? Yvette, what's going on? How you doing? Long time. So yeah, I'm just going to touch up on that. Basically, how can us as minorities get into that space of buying companies? So one of the first, because when we talk about raising funds, there's different ways to raise funds. We have a crowdfunding platform, WallStreet, and on our platform, as it stands right now, we're reward based at the moment. So when we're speaking in terms of reward based, you don't necessarily have to be an accredited investor to invest at this stage of where we're at right now, right? So reward based is the first level. Also, for the general public, in order for us to get into this investment space, you have the stock market, which is something that we're all familiar with. With the stock market, you don't have to be an accredited investor. And some may be asking, well, what is an accredited investor? And an accredited investor, I'm going to give you the term that's on here because I have the definition of it, but some things have changed or whatnot, because initially, in order to be an accredited investor, which is somebody who can raise, or somebody who can invest in these top companies that, before they go public, and where we necessarily didn't have that opportunity to invest in them at the time or whatnot. The Silicon Valley and all that, the Facebooks and whatnot, before Obama passed the Jobs Act, you had to have $1 million net worth that excluded your personal residence to be an accredited investor. And you have to, as an individual, be making $250,000 a year. Or if you have a spouse, you guys combined collectively have to be making $300,000 a year and $1 million net worth in order to be an accredited investor. And that means, I like to use Facebook because it's something that we all know, but before Facebook went public, in order for you to invest in that company and really see a large return on your investment, or be able to take, have an opportunity to take advantage of when it went public, you had to be an accredited investor. The regular smugglers like us, we didn't have that opportunity to get in there and make any investments. However, fast forward, 2009 and up, now we are able to do that. And so, with crowdfunding, WallStreet, my platform that I co-own with my business partner, TL, he's in the group. Now we are able to raise funds to get into these companies, to get into some of these companies. Now, for the rewards part, is more or less for startups. And when I say startups, companies that have just kind of been established, and they don't necessarily mean that they're under a year old. You can have a 5-year-old company that can still be considered a startup. But with WallStreet, just imagine if Facebook started all over again, and when he was in those dorms and he was trying to raise capital so he can make those kind of moves he needed to make to get it to where it's at right now. Imagine us being able to invest in Facebook, and then Facebook go public, and that initial $10,000 capital that we instilled in Facebook turned into 10 million, 100 million, or whatnot. Now, along with the rewards aspect of things, you also have equity side of crowdfunding. McDarrell, what's going on, man? What's going on? We just interviewed him a couple of weeks ago on our platform on the WallStreet. Make sure you guys check out his interview. He's in the real estate space. He's doing big things with that. And so you have rewards based with crowdfunding, you have equity, and you also have real estate. And so when you're talking about being the average Joe, the average person, rewards based is a good way to get in and get in on these companies at an early stage. However, you won't necessarily get any equity in the company, but you will be able to get some type of reward or gifts, should I say. So if it's a subscription-based company, SaaS company, well, maybe you may get a discount. So instead of paying $20 a month, your fee may be $15 or $10 a month in that company. And what happens is a lot of times after that rewards part is raised, a lot of companies may come back. So they say Facebook come back. Initially they raised a reward amount of $500,000, and then you was an investor within that $500, and that founder says, okay, I raised $500,000. I was able to help with my marketing campaign and hire a couple other employees for my company, and we're seeing larger numbers. So now what I'm going to do now is I'm going to come back to WallStreet, but instead of doing rewards-based campaign, I'm going to do an equity-based campaign. So now, because you invested in his company initially when nobody else didn't believe in it, now you're going to get first incentives to invest in this company the second time around. But this time, you're going to have equity stake in that company. So that's the equity part. So when you're talking about a regular person like us, you got the rewards base, you have the equity base. And now equity, he's going to raise another round. The first time he did $500,000. Now this time his company is a little bit more popular and more people know about his company. He went and raised $5 million. Well, now guess what? You have equity in this $5 million company. And it's different ways you can get paid out. But traditionally, when you're talking about investing in these companies, you don't expect to see any kind of repayment within the first, 3 to 5 years or whatnot, until it's really doing some numbers, or unless it gets sold or anything like that. But however, you still have equity stake, and depending on how well that company does, i.e. Facebook, your equity position gets larger and larger. So if you you put a percentage in there and you probably got 1% of the company, well, 1% of 5 million is cool, but what about when this company gets to 50 million and up, and it starts to go into the higher valuation areas? So that's that. So that's the regular people. Now you also have angel investors, right? So he came on WallStreet or whatnot and raised funds with us, but then he may want to say, okay, well, I want to raise larger sums of capital for my company. And you would go to what's called an angel investor, which can also raise funds on our platform in an equity base. And angel investors are typically people who invest in companies right when they're not, they're still in the infancy stage where they're not really established, but they probably can see, those angel investors can possibly see where these companies have some potential. Now, a lot of times angel investors can be a lawyer, your local lawyer, or a dentist office or somebody like that, somebody who got a little money behind them, but they don't necessarily know what to do with that money. A lot of times they're considered angel investors. So of course they're accredited as well, but they just have some money that's put, laid to the side, and they're like, well, you know what? I believe in what you have going on. I'm going to throw something in there. Now, they can donate a little bit of a larger amount towards your company growth. They help your company to grow. So those are the angel investors. And the angel investors kind of get in there, and when it's in the seed stage, when the company is in that that first seed stage and just kind of developing. And then we go from us, right? And a lot of times, a lot of people raise all the money they need just by rewards. We've seen some big rewards amounts raised. So you got the regular smugglers, you got the angel investors. Now, after the angel investors, you have what's called, what is it called? Venture capitalists. So the venture capitalists, they come in once the company has raised a couple of funds or whatnot, and they come in, and a lot of times venture capitalists buy percentages of these companies. And when I say buy percentages, it's a difference between buying a stock percent, like stock shares of a company at a small amount, and then buying a percentage of the company. And a lot of times when the venture capitalists get in and they make their investments in these companies, they want to they come in with teams of people that they already know. So this is a media company. Okay, well, I'm an angel investor. I want to get 40% stake in this company, buy out everybody else, and I'm going to, they sit on the board, and a lot of times they bring their connections. I got somebody at Warner Bros. That does movies or that does things with cinema. I could bring him on, and he could kind of oversee what we have going on. A lot of times the venture capitalists come in with a lot of experience because they do this. This is what they do on the regular or whatnot. And a lot of venture capitalists, they come in once the business is a little bit more established, right? And it got some traction, and they can see, dang, okay, this could possibly be a unicorn. All the boxes are checked. A lot of venture capitalists have different criteria as to which they invest in companies. That would allow them, okay, this is a good investment. Oh, but this is not something I'm really comfortable investing in or whatnot. But once you get to that venture capital stage, that means you got something. I mean, your company is doing something. So now we talking about venture capitalists, and they donate hundreds of $1,000s, sometimes millions. Angel investors typically do 100,000, a couple of 100,000. When we talking about venture capitalists, they're doing millions. $500,000. Ronald, what's going on? $500,000 and up. Millions of dollars for venture capitalists, right? So now your company is doing numbers. Now it's possible for your company to go public just off the venture capital stage or whatnot. But a lot of times the next level of investments is normally the private equity stage. A lot of private equity firms would like to keep these companies private. What's up, bro? Listen, what's going on, Ron G? I'm chilling, man. So a lot of times these private equity firms, because so you got the regular person, us, and then you got the accredited investors and attorneys and all that stuff like that, which is somewhat like the angel investors as well. Angel investors and venture capitalists are normally accredited. What's going on, boy? Chevy in the house. What's going on, brother? And then after the angel investors and the venture capitalists, then you got the big hedge funds that's normally take companies public, and then you could trade the stocks and or whatnot. Or you have the private equity firms. So you got a venture capitalist, and then you got a private equity firm. And the private equity firms is the guy like Robert Smith. Robert Smith is one of the wealthiest black men in the world, $5 billion fund. And what he does is he buy private companies. He buy private tech companies in the computer space, in the technology space. He buy these companies. He fix them up, fire people, hire people, whatnot. And let's say he bought this company for, for $500 million. He'll fix his company up, and now it's worth $1 billion. And he would sell it to either another private equity firm, or he would take that company public and cash out. This is the game that a lot of our people don't know about. We see it. Oh, The Rock bought the XFL and all that stuff like that, but not knowing the XFL is $1 billion company. The Rock is only worth a couple of $100 million. How did The Rock come up with the money to buy the XFL? He did it through crowdfunding, which is a platform that we offer. WallStreet, we allow you that opportunity to do that, especially once we release our equity-based side of things, where you'll be able to, invest, buy these companies and crowdfund and take it to that next level. So somebody like The Rock, once we release our equity side, he would have been able to come on our platform and raise that money that he raised to buy the XFL. So everybody, oh my God, The Rock owns the XFL. Byron Allen, the comedian turned businessman who owns the weather channels, and they say, oh, he paid $300 million for 12 weather stations and stuff like that. How he doing that and this and that? Not understanding he got a network of wealthy individuals, and they don't necessarily have to be wealthy all the time, but he has a network of wealthy individuals, and they all put their money together, right? So they say this company costs $1 billion. Okay, well, we got to come up with 20% of this. So I got 100 mil, and then, you got 19 other buddies that got 19 mil. They put that money together as a down payment on this $1 billion company, and then they get financed by Goldman Sachs or JP Morgan for the other 80%, right? That's in between there. And then this is how they're buying these companies. So it's the same way people buy real estate, which we all know, but on steroids. This is like on steroids. So you're talking about private equity, and and venture capitalists and all that. Well, a private equity firm is a bunch of venture capitalists putting their funds together, or they managing these funds from institutions. If you have a job and you got a 401k, a lot of these private equity firms are managing your 401k, and they're taking that money as down payments to buy these other companies. Sometimes they buy them on the company's cash. The post office, they have a pension. Well, a lot of these private equity and hedge funds is taking that pension money to invest in public and private companies. All right. So we go from the regular us, who we could do like the stocks, and we could do rewards based, to accredited investors, which is the angel investors and the venture capitalists. And then we have the private equity firms and the hedge funds. That's like the top of the top. Whatever job you do, when you think about what's the highest level of jobs or money you can make, is hedge funds and private equity firms. And within that, you got the investment bankers and all that stuff like that. But hedge funds and private equity is the highest of the highest. When you're talking about wealth, the majority of the wealth in the world is made through business acquisitions. When you think about Amazon buying Whole Foods, right? As opposed to Amazon creating their own food-based company, they was like, well, how about we just acquire Whole Foods and take over this and absorb it into Amazon? And then we're going to build this up. So we got Whole Foods for $1 billion, and we're going to fire these people. We're going to build it up. And now Whole Foods is worth $5-10 billion. This is the game that we're not taught. And this is stuff that we're not really, thinking about in that sense. And exactly, yeah. So then you think about, well, hold up. If they got 20% of $1 billion company, how are they paying the debt? And like my boy TL say, the cash flow from the company is paying his debt. So you just took your net worth from zero to billions or to millions in no time. All through crowdfunding, raising funds, raising capital. And now we can do this on a smaller scale and eventually grow it to that level. Let's say somebody come on our platform and they say, hey, you guys, WallStreet, we need to raise $1 million. We want to raise $1 million to grow our company or whatnot. They come on our platform, they raise that $1 million or whatnot, and then they come back and they say, well, we need to raise $10 million. This is how the game is played. Basically, you're duplicating yourself. I got $1 million saved up, or I got access to $1 million. I can only do so much. But imagine if I got 9 other people, now it's 10 of us coming to the table with $1 million. Now, how much more of a company we can either buy and invest in, or we can just kind of, invest our money into to help it grow. There's so many ways to do that. So, briefly, I just want to kind of talk about the different levels of investors and investments and how that plays a role into building wealth. But this is the stuff, these are the conversations we definitely want to start having more of. I post a lot about this stuff on my pages, and a lot of people DM me like, what is private equity? What is hedge funds? What is crowdfunding? How does crowdfunding work? Right? But this is the game. So, a lot of people is doing the shoe circles and all that stuff like that, which is cool. But imagine taking that same mindset and using that to buy commercial property, right? Imagine, okay, so this property costs $5 million or whatnot. And then you got to come in with 20% of $5 million. So you got to come in with $1 million. All right. So you get these cascade. Look, I can get this approved for lines of credit, or we can invest in a crowdfunding platform, $100,000 a piece. Or, maybe you get, 50 people to do 10,000, however much. But you're putting this money together to acquire this $5 million asset, as opposed to buying this house, buying all these houses with different roofs that you got to maintain. You put this money together and y'all get a commercial asset that's cash flowing. That's going to take care of the debt service on that investment that you just made. So learning how, when you talk about group economics, I just broke down from the bottom to the top of the food chain how group economics work, right? Putting money and raising capital together to acquire large assets. So I just put a post the other day that says, think big, start small. So the first thing first is, understanding how group economics work, and then raising capital. So WallStreet is just like GoFundMe, right? So a lot of people ask me, what is WallStreet, or how does that work? Our platform, WallStreet, is just like GoFundMe, but it's for businesses, right? We got something for corporations, for our people. So next time you hear about Nas and his group raised money to invest in Lyft, or a Chameleon raised money with his group to invest in Facebook way back when, and this person bought this company or whatnot, now you guys have that same opportunity to either, one, if you have a company, you can raise capital on our platform for your company, or two, you can invest in the companies from our platform. You know what I'm saying? So yeah, oh damn, that's a dope business idea. I think that's gonna be something that might hit. I'm gonna do $500 because when you're doing these campaigns, you're gonna say, well, each dollar amount is $500. You can pick how much you want to raise. So $500 per investor or whatnot. So that means everybody who come on this platform, they donating $500, and that's rewards based. That's to kind of get your feet wet. And then once you've done successful, you had a successful campaign. I need to raise $50,000. You raise that $50,000, and now you're coming back because you've got success in your company, and you want to raise a larger campaign. Then you're gonna come back a larger fund. Then you're gonna come back and do $500,000. This is how we raise money and keep money circulating within ourselves, within our industry, because now we control the companies that we investing in. When we control in the stock market, when we invest in the stock market, it's great. It's cool. I invest in the stock market. I have a decent stock portfolio. It's cool. But how is that really benefiting us other than the returns you may make on that money? As opposed to you got a homie that you don't have a dope idea. He just need a little more money. And you know, our family, you know, mom and pops, they don't have no money. Hey, what's going on? What's going on? Our parents don't have no money. Our friends don't have no money, but imagine coming on a platform like WallStreet and you raise your campaign on there. Hey, look, I got a dope business idea. I've been doing this for a couple of years and now I've been having success, but I just need a little bit more capital for marketing to help my company get to that next level. Because I feel like I'm looking at all these people on here, Jamal, Zakoya, I'm looking at everybody that's on here, and you can't tell me that our people, our minorities, we don't have the same mindset and idea as Warren Buffett or Mark Zuckerberg. All these dudes, it's like they're no smarter than us, but they just have access to those essential tools. Silicon Valley and all that. They just have access to those things that we don't have access to. So this is our way of bringing that to us through crowdfunding. And one of the things is you want to understand the different levels of crowdfunding, which I explained earlier, between the angel investors, the venture capitalists, and private and hedge funds, and then eventually going public or whatnot. So it's different levels to it, but the best thing is to start up right now. The best thing is to get started now. So we have crowdwallstreet.com. And if you know anybody who has a business that they've been running and that business is doing pretty good, because when you come on this platform, we want companies that's kind of somewhat established in the sense that they kind of already have some kind of traction. And coming on here is just going to be that extra boost, right? It's kind of like you working out and you getting results. And now we like the steroids, right? Or we like the HGH, and we're going to give you that extra boost to really get you to where you need to get. So, a lot of people just have Ravante, my boy. Oh, what's going on, man? Hey, I can't even front, man. This feels so good seeing all y'all coming on here, man, and showing me love and supporting. I really appreciate it, man. And I see y'all repost a lot of my stuff from my company, WallStreet. I appreciate y'all, man. I really do. I mean, people who I ain't seen in years, man, is on here. I appreciate the love and the support, you guys. If you can, share this live. We want to get our people to that next level. I feel like we can definitely create more billionaires within a black space, right? It's only, out of all the billionaires, there's only, 7 minority billionaires? Bro, any guarantee on the investment? I mean, can you track your money? Okay, Perfect. What's going on? Oh, man, my buddy Perfect. So when you talking about crowdfunding, right? You think about the stock market. Nothing. Okay, so you think about the stock market. The stock market, these are Fortune 500 companies that we're investing in, and these companies take dumps. I mean, the stock market just took a crazy dump a couple of weeks ago. So when you talk about startup companies, there is no guarantee on the investment. I repeat, there is no guarantee on your investment. So whether you're talking about rewards, right? And rewards meaning you don't have to be an accredited investor. You don't have to have no crazy essentials. And you get equity where you get a percentage of the company, or, you get a stake in the company. But no parfait, there are no guarantees when it comes to crowdfunding. It's kind of like, it's like how many companies that's like Facebook that's out there, and you probably heard about them for a little bit and then they died, right? They probably had a couple of years of success and then they died out or whatever. Well, if those companies don't last or they don't go up to expectations, then you just end up losing your money. Okay, so if you have a company on that platform, and Justin, what's going on, man? My boy Justin is on here. If you have a company that you want to raise money for, let's say like you have, I'm trying to think what kind of company I could think of. I don't know. I know you do security, Parfait, so you got a security company. Okay, so it's parfait. You got security companies that you own, and let's say that you had a little success, and you figure, okay, if I come on Wall Street and I'm able to raise $100,000, that would help me to hire more employees and get my name out there more for marketing. I can market more on social media, and whatnot, right? And you raise that $100,000 from these investors, right? These backers, right? But for whatever reason, your security company just don't do well and it goes under. Everybody that invests in that company, they may potentially lose their money. So there is no guarantees in this space. There's no guarantees. Diamond, what's going on? Oh, I appreciate everybody, man. All y'all coming in here showing love. But so they're perfect. There's no guarantees. But that's why before you invest your money, we're going to have a whole stat sheet of cash flow statements. How much is this company doing? How long this company's been established? How known is the company, right? All these things, when anybody come on our platform with their businesses and they're trying to raise money and they want to set up a campaign, we're going to go from A to Z as far as, we got to do background checks to make sure that they're not, any kind of scammers, or the kind of business that they have is scalable, right? They have a scalable business. That way, and we just want to see the likeliness of this business being successful. So there's no guarantees, but we try to vet these businesses to the best of our abilities. Okay? Do they have a great business model? And maybe some things in there that we could change. Because when you guys invest in these companies, we want to see you guys succeed too. Because when that company that come on that platform to raise money succeed, we succeed. And when we succeed, then y'all succeed. Because we want them to come back. Right? So let's say you sell a lip gloss line and you need to raise some money. Also depends on how much money you invest. The more money you invest, the more access you have to the founders in some cases. Exactly. That's another thing too. A lot of times, if you happen to invest a lot of money, you guys, now you're going to have access to the founders of that company. So I use Facebook. Imagine having Mark Zuckerberg when he was in a dorm room and he was putting his team together to raise money for Facebook. And now imagine if you got access to Mark Zuckerberg, the owner and founder of this company. But in some cases, it would be the same with this right here. And you'll be able to ask them questions because whoever raised money on that platform, they have to do what's called a pitch deck. And on that pitch deck, it will be just like this, where they're going to be telling you about their business, and you guys get to ask questions. Okay, so you said you want to raise $100,000. So where is this $100,000 going to be allocated? And they got to be able to answer your questions. And I know for me, if I'm asking somebody something and they can't answer my questions, that's not a good investment. You can't even tell me where this money going. But I want somebody, okay, so where's that $100,000 going to go? $20,000 is going to go towards marketing. $50,000, we're going to hire a couple of employees to help scale this company up. And then the other $20,000 is going to go towards getting some more merchandise. Okay, cool. And then now within those different things that they explained, now they got to go into more depth. So when you're trying to, I'm hiring employees, what kind of employees are you going to hire with this 50,000? Or, you know what I'm saying? Or, when you talk about marketing, what kind of marketing tactics are you going to employ into this company? So who's ever raising money, we're going to have a date set aside where everybody who's all our investors and backers, you guys are going to be able to interrogate them. I say interrogate because you want to know where your money going. Just like you do your homework in the stock market, but we definitely want to be fair. And so we make sure everybody have their stuff together. Parfait, great stuff, my man. I continue this between the box. My man Parfait, I appreciate you, brother. I appreciate you. Do anybody have any questions, man? I want to answer some questions. I want to see what you guys are thinking, or any ideas you have. Maybe you know somebody who has a dope tech company, right? Because another question I've getting a lot is what kind of companies can raise funds on your platform? I'm going to keep it real. We want to show love to everybody, right? But if I'm talking about the Amazons and the Googles and the Jeff Bezos and the Facebooks and the Instagrams, we want companies to come on that platform that can potentially be scaled to those levels, right? Because I feel like minorities have the same abilities to raise funds of 50 million, 100 million, just like anybody else. We just got to educate ourselves, and then we put our minds and our monies together. Everybody know how much spending power the black community has, the minority community has. Everybody, we make up for whatever 15 trillion, whatever a year in spending power, whatnot. But that means nothing if none of our money is being invested into our communities. There are no guarantee with startups, but there will be guaranteed returns on more established asset classes on our platforms. Right. Bartley Hornback, welcome to the chat, my brother. Welcome to the chat. You guys, if you can, share and share this on your page. Maybe somebody you know who's not informed can be informed. But when we talk about group economics, crowdfunding is the way to go. This is how the Fortune 500 companies are doing it. This is how they're taking their companies from in the dorm rooms. Everybody's sharing a post about Jeff Bezos having Amazon in the garage and all that. How can I take my company and scale it to that $1 billion evaluation? It's by group economics, supporting each other, crowdfunding, syndicating funds together to scale it. But then another thing too, we want to come out with businesses that are scalable. There's nothing wrong with the mom and pop businesses that we have, but our people tend to have a sole proprietorship mindset. And what is a sole proprietorship, Jamsky? Well, a sole proprietorship is a company that you're mainly the worker. You're like the main worker. You do everything. And if you take a vacation, that stops, right? So we want to get more into the S Corp, C Corp area when we talk about business, things where we can scale by hiring people. We want to get into those kind of businesses. Everybody's pretty much doing the same thing. So you take whatever business you have and you go in the group, and then you're going to see how many other people doing that. But how many Facebooks are there, right? How many Googles are there? So we got to start coming out with business ideas where you're one of a dozen. Everybody buying real estate, how many black owners own banks, right? How many black banks are there, right? So the moment we start thinking like that, and now we crowdfunding to provide capital for businesses that's in that area, now we're talking about creating wealth. That's the game. It's nothing against selling eyelashes. No, it's nothing against that. But how many billionaires are doing what you're doing? How many billionaires? That's the question. How many billionaires are doing what you're doing? Right? Because I studied the billionaires because I know at the least, if I could just duplicate 1% of what they're doing, I'm going to be in $100 million space. I'm going to be in a multi-million. I'm going to be a millionaire anyway. So my goal is to study the billionaires and what they're doing and duplicate that. And I don't have to duplicate 100% of it. I just got to duplicate 10%. How many billionaires are in the music space? We going crazy because Jay-Z is worth $1.1 billion, which is dope, is great. But he going on a shopping spree, or he buy a Tesla or something, and he had $900 million. So we want to mimic what the multi-billionaires are doing. This is how we can get that number from, I think out of 3,000 billionaires, only like 7 of them are black. Like, come on, man. So the kind of businesses we want to start with that in mind. Nothing wrong with the mom and pop. The mom and pop businesses are the backbone of the minority community. I understand that, and we love it. But if we want to get more black billionaires, other than Michael Jordan, Oprah, the same ones, and then a lot of these are recent. So you think about 5 years ago, a lot of these people wasn't even billionaires. Kanye West, Jay-Z, these are new billionaires. So we got to look in the more of the spaces of what are they doing? Okay, they got these dope apps that can be multiplied and duplicated, right? There's no limit to how many people can get on Facebook, how many people can use Google. It's unlimited. There is no cap. So this is the mindset we got to start having. A lot of y'all see me post these mansions and elaborate, $100 mansions and all this stuff like that or whatever, 15 bedrooms. A lot of people like, you tripping. What kind of job gonna pay for that? That's the problem. I'm not looking for no job to pay that. Oh, you're not a rapper or you're not an athlete or this. I'm a businessman. I want to be able to go in the same clubs or do the same things they doing and not have to get on the field and get my head cracked in or sign a 360 deal. And now I'm on social media crying about how I'm not getting paid. Oh, they're not trying to pay me because I'm in a 360 deal. Release me from this deal. Birdman and Baby, all these groups, TLC, and oh yeah, we didn't make no money. You feel what I'm saying? It's other ways to get to that other than just doing the same thing that everybody else is doing, which is nothing wrong with that. Nothing wrong with rapping. Nothing wrong with selling, I don't know, whatever, lip gloss, whatever. There's nothing wrong with that. But we can't keep saying we need more black billionaires, but then the kind of jobs you're doing or the kind of businesses we're coming up with is something that 1 million other people is doing. See, we start businesses in fields that's overpopulated. You pull your business up and there's a gazillion people just in your neighborhood that do the same thing. But now you're talking about raising money to buy a bank. Now we're talking. Now you're just one of two, right? Because we can count on one hand how many banks is in the United States. We probably can count on one hand. So now how about we start thinking like that? Okay, you got a homegirl that's been working at Bank of America for 10, 20 years, and she's the branch manager. You got a homie that just started working, he's a teller. Now we got to hire our own people. We can set up an account on LinkedIn, on Glassdoor, and hire our own people to work in this bank. This is the game. This is how we create more billionaires. Group economics, and this is how it's done. Right? We're taking all this money, and then we're gonna put it into one entity and help the entity grow. So these are the kind of businesses that we want really on our platform. Now it's cool if you want to raise $10,000 because $10,000 is our minimum. That's cool. We can do that. You want to raise $10,000 to do this or whatever. That is cool. I'm not knocking it. A lot of companies started out small, but when I go on your post and I see, oh, we need more black wealth and black billionaires and all that stuff like that, that ain't it, fam. That ain't it. We got to start thinking on the larger scale. And thinking on a larger scale, when somebody say $100,000 a year, we ain't getting excited because my model was $100K a day. So that means automatically my mind is going to think of ways, well, damn, how I'm going to make $100,000 a day. See, everybody want to make $100,000 a year, 6 figures a year. That's cool. But when you start thinking $100K a day, which is my motto, your mind is going to start thinking on a larger scale. Okay, I got to do something that everybody else ain't doing in order for me to hit that number. Because this ain't no number that you just wake up and do. You ain't gonna just wake up, oh, I just hit $100,000 a day, unless you're doing the kind of business that these other cats is doing, the Ray Dalios and all that stuff like that. Another point, Supreme, the clothing brand I see a lot of people wearing. A private equity firm owns Supreme, man. People don't even know that. A private equity firm owns Supreme brand. Some white dudes that sit on the board. A private equity firm owns Supreme brand. The same brand that we rocking, a private equity firm owns that. Because that's the game. To buy and acquire other companies and merging with other companies and sell those companies off. This is the game. You talking about becoming a billionaire? We need more black billionaires and more minority billionaires and all that good stuff. What we doing is cool. Okay, I do taxes. I'm a notary. That's cool and dandy. But that's not going to get you to that billionaire status or even $1 million a year. Or if it's going to get you to $1 million a year, you're going to be working. I want something that I just set it and forget it, and I just hire the people and make them do all that. You feel what I'm saying? Social media platform. It's unlimited. It's a limited amount of people that can get on social media. It's an unlimited amount of people that get on LinkedIn, that can get on Instagram. I mean, it's people on Instagram who got 20 million followers just on Instagram. I ain't got to do nothing. You just sign up and go. These are the kind of businesses we got to set up. Please leave this live up for replay, bro. Oh, most definitely, man. Most definitely. I'm glad I got y'all open, man. I know y'all could be watching football right now, Jason. What's going on? I know y'all could be watching football and all that, but every Sunday, WallStreet, we come and kicking game. We want to create billionaires, man. 100K a day. Jamsky, you heard it here first, man. 100K a day is the goal. $100,000 a day net is what you should be telling yourself. Nothing less. I don't want to hear about $100,000 a year and all that. 100K a day. Because if you're doing 100K a day, even if you don't hit 100,000, you're going to hit 100,000 a year, regardless, right? So they say, well, aim for the moon, and at the least, you're going to land amongst the stars. Tony, what's going up, man? What's going up? So that's the goal. All that 100K a year is cool, but we want to think bigger. We want to do bigger deals. And how are we going to do bigger deals? By crowdfunding. A lot of y'all got a lot of homies that's out right now with businesses, and they just need a little bit more money behind them, and that'll help their business grow. You got a restaurant, as opposed to just thinking, oh yeah, I'm a business owner, I'm a CEO, I got a restaurant. That's cool. But now we're thinking like McDonald's. You need to learn how to license that restaurant, or how can I franchise my restaurant? How can I duplicate this? Whatever we do, we want to make it duplicatable. How can I take this restaurant that I got and I raise money for it, and how can I grow this? Not just, oh, I got a restaurant, I'm a boss, and you know what I'm saying? Everybody, you do a little something and you a boss. Everybody a boss, right? In a rap game, everybody got money. But imagine if these white boys and these private equity firms was cocky and they just want to shit on everybody in the music industry. You feel what I'm saying? Everybody got the little chains and all that. Nah, that ain't Tank. What's going on? Oh, man, they bringing out everybody. 100K a year is so 1999. Tony, talk to him, baby. That's my guy in real estate. But just imagine that. Everybody talking about, you get a little business and everybody, I'm a boss, El Jefe and all that. You feel me? That's cool and all. But the real dogs is in the white suits, right? The real wealth is created. Okay, so I got this saying I say, right? If all your physical attributes were taken away, how would you make $1,000,000? Meaning, if you couldn't run and play in the NFL, if you couldn't jump and play in the NBA, if you couldn't sing, or if you couldn't rap, right? So if you couldn't do none of these things, how, as somebody told you, if you don't make $1,000,000, your whole family is dead. If all your physical attributes were taken away, how would you make $1,000,000? Because Jeff Bezos don't sing, he don't do none of that. Mark Zuckerberg, like these dudes is cornballs. But while we was out there backpedaling, me myself, when we was on that field backpedaling and running routes, them white boys, they was in them books learning about finances. How can I buy companies? Jay Nick, what's going on? We could use some help. We got the product. Okay, cool. We gonna talk. If y'all got any questions, DM me and we gonna talk. Gary, what's going on, man? What's going on, big dog? That's my boy from my high school, Northern. What's going on? But listen, if all your physical attributes were taken away, you couldn't rap, you couldn't sing, you can't run no, you can't play no football, run no routes, you can't play no basketball, and somebody told you you gotta make $1,000,000 this year, or I'm gonna kill your whole family. How would you make $1,000,000, man? Hassan, what's going on? Tank, what's up, baby? How would you make $1,000,000? These are the questions we gotta start asking ourselves. Because growing up, we was always focused on what we saw was the sports, we saw the music, the rappers and the singers, we saw the dope boys. But if all our physical attributes, meaning we can't rap, sing, and none of that stuff was taken away, like if all that was taken away, we can't rap, sing, none of that stuff, and we had to make $1,000,000 in a year, or our family is dead, how would you make $1,000,000? Right? Because when you think about sports and these labels, well, I can say I'm gonna go to the NFL as much as I want to say that. But at the end of the day, if one of these white boys, these owners, if they don't pick me up on their team, I'm not getting in the NFL. Right? So my mindset went from trying to get to the NFL to owning a team in the NFL, owning one of these NFL teams. But I know I can't own an NFL team doing the same shit that all my peers is doing. Everybody's doing the same thing, which is nothing wrong with that. Everybody's selling lotions and potions. There's nothing wrong with that. But if I want to acquire the Heat, I'm from Miami. So if I want to acquire the Heat or the Dolphins, I got to be doing a certain kind of business that everybody else can't just wake up and do. I got to separate myself from the masses. Everybody doing the same shit. I can't own this team doing what everybody else doing. The Rock he didn't buy the XFL doing what everybody else is doing. Nah. But that's the question, man. My motto is 100K a day. If you had to make $100,000 a day, what would you do to make that? If somebody told you that you can't sing, rap, sell drugs, play no sports, but you gotta make $100,000. I said $1,000,000. You gotta make $100,000 this year. How would you make $100,000? I feel like we're just as gifted as these Fortune 500 company owners. We're just as gifted. Our focus is just focused on sports and things of that sort. But once we take our focus off of sports and we get more corporate attorneys, business attorneys, and investment bankers, everybody, I got a master's in psychology. I'm like, you got a master's in psychology? That's love, but what you gonna do with that? You got a master's in psychology, but I know cats who don't have no degree at all, and they got on YouTube and they spend some game and people signing up to get some lessons from them, some coaching from them. And they ain't got no degree. And you got a degree in psychology. Oh, I got my master's in psychology. No, you can't say nothing to me, whatever. The degree challenge, but you working at Target. You feel what I'm saying? But this chick over here ain't got no degree, but she on YouTube kicking some game. She on Instagram kicking game. And now she got a subscription base and people signing up. Stacy, what's going on? What's going on, family? So this is the thing. There's nothing wrong with the businesses we got. Or I got homies that got trucks. I'm a boss. I'm a CEO. I got my own trucking company. They got their chest out. That's dope. But we want to strive for higher than that. Okay, you got one truck. Now let's get 100 trucks. Let's get 100. Now how you going to get to 100 trucks? Crowdfunding. We got a platform, WallStreet. You got a trucking company that's doing well. You understand the trucking business. You can come on WallStreet and you can raise $100,000. The average truck, 18-wheeler, costs $20,000, $30,000. Now you just raised $100,000. Now you can probably put a little something down on these multiple trucks. But WallStreet, our platform is a platform for you to raise money for your brand. You got an established brand that's doing some good numbers, but you just need a little bit more capital. You're going to come on crowdwallstreet.com to raise some more funds, and we're going to fund you. We're going to get you right, man. Okay, cool. So how much money you making? Okay, what you doing for marketing, this and that. And then we're going to get you together. We're going to button you up. get you right, and then you're going to come on here. Hey, you guys, what's going on? I'm Jamsky. I got a JB trucking company. And then just like how you guys are here asking questions, you're going to be able to ask them questions. Okay, so you want to raise $100,000 for your trucking company to grow it. Where's this money going to go? What experience do you have? You guys are going to be able to do that. But we got to start thinking bigger. We got to start thinking bigger, man. I want to see more people talking about buying banks, man. How can I buy? Okay, I need $500,000. I'm about to buy this bank. You feel what I'm saying? That's what we need. Burning Solo. What's going on, Andrew? My man, sell brands. That's right. But we got to start thinking on a larger scale. So I see all this stuff on social media. It's cool. Everybody got their businesses and all that. But I just think that that's like the bare minimum. You got your business. That's cool. Now let's go to that next level. Like I said, we need more billionaires. And the billionaires ain't going to come from doing what we're doing. We got to start thinking on a larger scale. Things that can be duplicated. You own a restaurant. Okay, now how can we franchise and license this and get these things in 50 different states? You feel what I'm saying? Okay, you got a lip gloss brand and you selling it to your mom and your friends and on Facebook. That's cool. But how can we scale this to $1 billion company? We got to get this in Target. We got to get this in all these different, Walmart. We got to get this in different brands and different companies and corporations. You feel what I'm saying? So, it's a rant. I'm mad, but I'm mad because I know what the black community is capable of. And I know where we can go if we think on that larger scale. And it could just be frustrated sometimes, man. Because I have deals and things like that that's ready to go. But trying to get people to invest and make these kind of moves, it's above them. They looking like, what? Buy companies, mergers and acquisitions, raise funds. But this is what y'all sharing all day. People be sharing all this stuff in their posts. You sharing about how Nas invested in Lyft and how all these rappers bought this company and how Magic Johnson owned this company and owned all these or whatever. But we ain't doing none of that shit. We ain't doing none of it. We sharing it all day though. We share this all day. That's what I'm talking about. My man, I'm glad you're feeling this, man. We share all this. I see it all day. We sharing this. Oh, such and such. This Amazon just bought this company, or Tesla just bought this company. My people own the restaurant. They trying to franchise now. Okay, well, holler at us. We gonna talk. But we share all this stuff all day, and I see it all day, man. Oh yeah, they get a little buzz, and then that's it. That's it. Get a little buzz, and that's it. Robert Smith. Robert Smith is a private equity owner. He owns a private equity firm. Private equity firms, they buy other companies and they scale them up and then they sell these companies. Everybody's showing, oh yeah, he donated $30 million. But nobody didn't think, well, what did he do? He's worth $5 billion. He don't rap, he don't sing, he don't play no sports. I've never heard about him on media, on the TV or nothing, but he's worth $5 billion. He's worth more than your favorite rapper. He's worth more than your favorite athlete. How did he acquire a $5 billion network? Nobody didn't research it. They just share all this stuff that they see and then that's it. So I'm like, already, like, if I was green, I could be like, okay, well, I'm just going to do this and boom, hit that. But I'm like, nah, I'm going to put my people on, man. Because, like I said, out of 2,000 billionaires, only 7 of them are black. That's embarrassing. And it's not because they're holding us back. It's just we don't want to research. Because at some point, my mom didn't teach me and the schools didn't teach us. That's not an excuse no more. That's just not an excuse. I'm not expecting the schools to teach my son the stuff that I know. I'm not expecting those schools to teach my son that. I'm just not. And if I do expect the schools to teach that and they don't, and my son fall behind, that's on me, man. I can't blame nobody else but me. We got to stop expecting everybody else to teach us shit that's on Google. That's on. It's online. You guys know me. Everybody on here know me. I ain't got no degrees. I know I ain't got none of that. I ain't got none of that, man. All this is from reading. So we got to start thinking on the larger scale, man, and stop expecting everybody else to show us what we need to know. Think on a larger scale. Tap in. We do this every Sunday. Join our group at WallStreet group, and let's go. But we got to start thinking on a larger scale, man. I just wanted to start thinking on that 100K a day. If somebody told me I got to make $100,000 a day, how would I do it? Everybody be so excited. Oh yeah, his job paying him $100,000 a year, or my business making me $100,000 a year. That is great. That is awesome. I love it. There's people that's not doing that. But now what? Okay, you're making $100,000 a year. You just wrote off that you ain't making no money on your taxes. Now what? Corey, what's going on? You are absolutely correct, man. I appreciate the love, man. I appreciate the love, y'all. I'm just spitting game, man. It's just this been on my heart for the longest, and I'm just glad y'all tuned in. Y'all could be watching football right now. And y'all on here watching my black ass talk, man, and rant, talking about business. But definitely look up angel investors, look up venture capitalists, Burn the Solo, my man, I appreciate it. You guys look up private equity, look up hedge funds. Watch this video again, man. I'm giving you the terms, research these terms. So when y'all hear this stuff and y'all see the next company, oh, this guy just bought this company for $2 billion and then he turned around and fixed it up and now that he sold it for $10 billion, y'all know what they're talking about. I'm gonna give you another example before I go. So the UFC. In 2000 and I want to say like 2005 or something like that. What's his name? Seth Rogen, or I can't think of the guy's name, but he got it for Tita Brothers. These are some billionaire investors. They own hotels in Vegas or something like that, right? So he got them together, and the UFC was up for sale. I want to say like 2005. Tuned in, my man Andrew. What's going on? So 2005. Is it Seth Rogen? What's the guy name for UFC? I can't think of his name right now. What's his name? Dana something, whatever. I can't think of his name right now. But the guy who's on UFC, I see him all the time. But he found out that the UFC was up for sale for like $40 million, right? Or yeah, for $40 million. The UFC was up for sale for $40 million, and he got these two big time money guys together, his buddies, and then they bought the UFC, and they said, because you bought us this great deal, we're gonna give you 10% equity in this deal. I want to say it was 40 million. Don't quote me on the numbers, y'all. I'm kind of drawing blank. So follow me. So he bought, what is the guy? I got it. Hold up. Seth Rogen. Hold up. What's his name, man? I think it might be Seth Rogen. Let me see. UFC owner. But long story short, they bought it for like $40 million. And then he brought these two guys together and they gave him 10% stake. Mind you, he didn't put no money in there, but because he bought them such a great deal, 10% stake. So you talking about fast forward 10, 15 years later, that UFC sold for $4 billion. They sold the UFC for $4 billion. And because Seth Rogen bought this deal to them, he didn't put no equity in there. He got 10% stake in that company. Do you know when they sold that company for $4 billion, they cashed him out $400 million? Because that's the game. You talking about being a billionaire? This is the game. You buy companies, you fix them shits up, you merge them with other companies, the competitors, you roll them up, and then you sell them to a private equity firm or to some other billionaire. Or someone got a dope company, you crowdfund, you raise funds on a crowdfunding platform like ours, WallStreet, and to acquire these companies, to invest in these companies, you fix it up, you buy. Oh, Joe Rogan, that's his name, Joe Rogan. So just because Joe Rogan bought this deal to them, they gave him 10% without putting no money into it. And then when the UFC recently sold for $4 billion, he cashed out at $400 million, you guys. $400 million. Now you got to understand this. It's people out there that do this for a living. They raise capital. They raise different funds. They acquire companies. They build this company up and get this company nice and strong. And then they acquire either a competitor or a company that complements the company that they just bought. And then they sell all that shit for hundreds of millions of dollars. And they didn't have to twist an ankle on the field. They didn't have to break a leg on the court. They didn't have to get in the studio. They didn't have to sing. They didn't have to do none of that. None of that. But because they did their research and whatnot, or they surround themselves around the right people, they just buying and selling companies. People buy and sell real estate. I bought this house for $50,000 and I fixed it up and I sold it for $200,000. Yeah, but I bought this company for $500,000. I fixed it up and I sold it for $5 million. That's the game. Because real estate, you only can sell it for so much. If the company in the area is supporting $500,000, you can't go too much further past that $500,000. You got to stay within that range. But you can buy $500,000 real estate. You can raise money right now for a down payment on a $500,000 business right now. You could go on WallStreet right now and raise the campaign and come up with 20% of $500,000 to buy a $500,000 business. So I buy a $500,000 business and you buy a $500,000 house. And you can put the most expensive, lavish interior decorations inside that house that you want, all the components, all that. And I'm going to hook my business up from $500,000 and fire people, hire people, turn up the marketing and all that. I could take my $500,000 business and turn around in 3 years and sell that $500,000 business for $5 million. You can't sell this $500,000 house for $5 million no matter what. No matter what you do. In 3 to 5 years, you cannot sell this $500,000 house for $5 million. You can't do that. You can't. You got a $500,000 rental. Let's say the mortgage is $2,500 a month. You rent it out for $3,000 a month. So you making $500 in cash flow, right? So you raise capital on WallStreet. Okay. I know that boy Jamsky was talking about he owned WallStreet, the co-founder with Tavares, and I can raise money on there. I want to buy this $500,000 house. All right, bet. So you come out with 20% of this $500,000 house, and you rent it out. So the mortgage, $500,000. The mortgage is typically $2,500. We're gonna say $2,500, probably $2,000. We're gonna say $2,000. So the mortgage is $2,000. I'm gonna rent this out for $2,500. I make $500 a month spread. $500. Somebody correct me if I'm wrong. Out of that $500, I gotta put up $150, maybe $200 for repairs, just in case the roof go out, the tenants don't pay, or something like that. You gotta have, so out of that $500,000 spread, remember, a $500,000 house, and the mortgage is $2,000, and I'm renting it out for $2,500. Hell, we can even say $1,000. You're renting it out for $1,000. Okay, at least half of that got to go towards repairs, just in case something break. And you guys, as the owner, you have to repair this stuff when it breaks. Unless you do, you want to get into the strategics and all that stuff, and it's owner fine, whatever. Unless you want to go into that, but we're just gonna talk about a regular rental, and it's $500,000. The mortgage is $2,000, and you rent it out for $2,500 or $3,000. Well, a portion of that got to go to repairs. You got to put that up just in case something break, the roof start leaking, the toilet start messing up, and it costs $200. So that's already gonna cut into your profits already. So you walk away with $500 a month. You get all this overhead and all this shit that could go wrong for $500 a month. And you're a professional at this. You're a professional in real estate. Don't forget the property tax, parfait, my man. Property taxes, right? So not to mention all that. So out of this $2,000 mortgage, you rent it out for $2,500 to $3,000, but really you rent it out for over $1,000 more. On average, it's about $500. I got a couple of buddies in real estate that's doing it at a high level. But we're gonna say you rent it out for $3,000, right? So out of that $3,000, you got to put money up for repairs, for taxes, just in case anything go wrong or whatever that may be, right? I buy a $500,000 business, a beauty supply store. We're gonna say a beauty supply store, right? That's what we all familiar with. Well, we all know that women need to get their hair did, their nails did, all that stuff or whatever, beauty supply store, whatever. I buy this at $500,000, and I could run campaigns online to raise profits, to get more people to come into my store. I could create an online store, right, and do marketing on Facebook and do ads on there to get more profits to come into my store. I could take this $500,000 store, and in a couple of years, I could take this company to $1 million plus in less than a year. Ain't nothing for me to get somebody that's an influencer and pay them $500 and tell them to post my store. Hey, look, post this, do a comedy skit, and Desi Banks. Hey, Desi Banks, do a comedy skit for my store. And he get 2 million views per comedy skits. So just imagine, I just pay him $500. He get 2 million views per video. He's promoting my store brand. All those eyes and people is coming to my store to buy lace fronts, wigs, hair, whatever they buy, nails and all that stuff. They come into my store. So you got a $500,000 house. I got a $500,000 company store or whatever. We want a business or whatever. You get in $500 a month cash flow. My store is easily doing $10,000 a month. $10,000 a month. That's $120,000 a year. Come on, man. 500 times 12. How much is that? What? That's like what? That's like $6,000 a year. So you're doing $6,000 a year. I'm doing $120,000 a year. No, more. Oh, God, I'm tripping. No, right, yeah, $120,000 a year. So that means if I get 10 of these stores, I'm in a $1.2 million range. If you get 10 rentals, you still ain't, you barely, you feel me? You still, no, that's $6,000 a year. I'm tripping. So $6,000 a year on your property, and I'm doing $10,000 a year on a month. On my store, 10,000 times 12, 120. So now I know, okay, well, if I get 10 of these stores, that's $1.2 million a year. And I can just keep leveling up from there. As far as these properties, how many properties do I have to get to $1 million a year, man? Making $500. Not to mention all these roofs, all these tenants, Section 8 and all this stuff, which is cool. It's a great start. I'm not knocking it at all. I've been in the real estate space. I done invested in properties. I done did loan. I done did all that. I done did it. But I'm seeing the billionaires of the world and how these billions are made. And it's some people that's in the real estate game, but they doing commercial real estate. So if I'm getting back in real estate, I'm going to raise a fund for a down payment to buy a strip mall. Everybody going crazy. Remember Nipsey Hussle? He owned a little section over there. People going crazy over that. Everybody own a couple of houses. Oh, yeah, I own 10 properties. Well, if you stay in Memphis and the houses is $30,000 a piece, you know what I'm saying? And everybody going crazy. Oh, young couple in Chicago own 20 houses. That's great. That is lovely. But houses in Chicago cost $15,000. Oh, couple in Atlanta owns 20 properties. That's cool. But houses in Atlanta, you feel what I'm saying? If you're from Miami, you know everybody moved to Atlanta because it's cheap in Atlanta. There's nothing wrong with that. But now we need to start talking about buying commercial properties, man. Commercial properties. The movie The Banker. These guys was buying high rises. They was buying banks. This is how we want to think. Some people may miss it who just got on right now. But earlier I was talking about how it's only a handful of black-owned banks in the United States. So imagine if more of our people is like, yo, I want to get a bank. Yeah, such and such got a beauty supply store. Such and such got, a hair salon. I want to buy a bank. I want to raise capital and buy a bank. Let's get some money together. Everybody got money. Everybody got their chains and all that, the whips. So let's put money together to buy a bank. That's the game. Now we talking. Now you talking about circulating money. Don't forget the property. Oh, yeah, I always say that. But now you think about circulating money within a black community. Well, imagine if our money is going into a black bank. We going to work and we put our money in Chase and Wells Fargo. That ain't money. It ain't coming to us. That money ain't coming to us. You feel me? So those are some things I want to talk about, you guys. I don't want to hold y'all. I know it's football Sunday, and I know y'all want to watch our games, but now, and people told me I need to start getting on here on lives more and start, talking that talk or whatever, because this is the stuff that I'm working on. This is stuff that my team, my partner, TL, Crowd WallStreet, this is the stuff that we're doing. The stuff y'all see on TV is the stuff that we're doing. We own Crowd WallStreet. We are the owners, black owners of Crowd WallStreet. This ain't no somebody owned it and then somebody else is like, but the owners is white and they still making money. Now, when you invest in Crowd WallStreet and you get a business that's raising money on our platform, we own it. We are the owners. Ain't nobody else the owners. This us. This incorporated. This is us. This is our company. When you talking about buying and selling companies, you want to get into that space, the big dogs, the private equity firms, the Robert Smiths and all that, this is the game. This is what we doing. This is what we own. And buying commercial property. Oh, I seen this lot over here that's for sale for $5 million, right? People see $5 million and that's a lot of money. Oh, that's a lot of money. I ain't going. See, you already done played yourself. Because when I see $5 million or $15 million, my mind is trying to figure out how can I raise capital. I got the platform. Everybody go to GoFundMe. Well, we own the GoFundMe, but this is for businesses. Every time somebody do something, I'm finna go and GoFundMe, and I see people raising $100,000, $50,000. Well, let's do this for business, because the business is gonna pay us back. You feel what I'm saying? Now we got more black businesses in these communities. You talking about doing Tulsa, Oklahoma, and all that? Well, imagine you help your friends and all that raise money for their businesses that's in these communities. Well, it's less likely to be crime in these communities because that's my auntie business. Oh yeah, that's what's his name, auntie business over there. Now it's less likely to be crime in our own communities because we own the businesses in that community. We own the shopping centers in our communities. This is how we do it. Group economics, everybody throwing this word around group. That's cool and all that, man. But you don't know the first thing about group economics. We created a platform for you to raise capital to acquire that strip mall. Oh yeah, this corner store and all this been over here. But these areas where they own it, that's cool. But I'm going to show you how you can get in there and own that. When you see these big high rises for $100 million and all that, I want our people to see that and be like, how can I own that? Not, $100 million, $500 million. Dang, that costs too much. You see these NFL teams selling for $4 billion? Instead of saying only they can do that because they inherited money, this and that. No, we're going to start thinking, how can I do that? Let me get around the right people. You feel what I'm saying? Okay, well, Udonis Haslam, Rick Ross, Plies, all these boys in the city. Let's raise a fund with these boys for a down payment. You feel what I'm saying? SPACs. Exactly. Let's create a show. Let's create a company and raise. Look, people create not false companies, but they create corporations, and the S Corp can have up to 1 million shares. And they would sell these shares for $500 a share just to raise money to acquire an asset. This the shit we ain't talking about. This is stuff we ain't talking about. Man, listen, man. All these degrees, I see people posting the degree challenge and all that. I'll put my knowledge up against those degrees all day, every day. Because these people is working at Target, they job paying them, which is, it's cool. I don't knock nobody working. I don't knock it at all. But the more people we get to start thinking on this level of how business is really done, now we talking. Now we talking. How can we acquire strip malls? How can we acquire corporations? Like, I want to buy companies. I want to go big, man. All this small shit is cool, but I want to go big. But you can't do it alone. If these wealthy people is leveraging other people's money, then we got to do the same thing. But we got to start going big, man. Now you talking about buying real estate, but on the commercial level, now you got more cash flow coming in. Just like the movie The Banker, these guys was buying banks and they was buying the high rises, man. I think y'all don't understand this. If you're in Miami, imagine going to Brickell or going to downtown Miami, or if you're in LA, going to downtown LA and knowing that this high rise is owned by 2 black people. Just imagine. Because they put their money together, they find the right people. This the game. But I'm going to let y'all go. I know I said I was going to let y'all go an hour ago, but I'm going to let y'all go for real. Just something to put in y'all head. Crowdfunding, CrowdWallStreet.com, Crowd Wall Street Group. Make sure y'all join our group. You can make a free account on our platform. It's no charge. If you want to set up a campaign for your business to raise money, your business have to be established already. You got to have some kind of cash flow, have some kind of, following already. You can't just wake up and have an idea, oh, okay, I'm going to go on Crowd Wall Street and set up a campaign. Nah, you got to show that you got some investors lined up. You already got some people lined up and ready to go. And you already got some traction. And then you come on here and we'll put them finishing touches on your business. And we're going to get you right. But CrowdWallStreet.com, Crowd Wall Street Group on Facebook, Crowd Wall Street on LinkedIn, Instagram. You guys make an account on our platform, CrowdWallStreet.com. And let's start raising these funds. We're going to release the equity part pretty soon, but we want to get this rewards part going. We want to get this going. We want to get our people to start raising funds on the reward side of things. Once we see how that goes, we're going to unleash the equity side. And now how it's about investing in these companies and buying these companies, now we can really do that. You guys are talking to the owner of a crowdfunding platform, you guys. I don't think nobody really understands the importance of this. You guys talk about GoFundMe and all this stuff all the time. You guys are talking to one of the owners of a crowdfunding platform you have access to, that you can raise money on and invest in your business, invest in other businesses. You guys, the platform is here. We have it. Share this live on your page. Tag your people in there. Let's grow this thing. We're trying to get our group to a million, a gazillion, but we can't do it without y'all. A lot of stuff I said I can't do it by myself. I can't go out here and buy a Walmart store by myself, buy whatever it is I want to buy. But we buy companies. If you don't take anything else from this, buy companies. How to buy companies. How to buy businesses. How to buy commercial properties. You guys, Jamsky, one of the co-founders of Crowd Wall Street. I thank y'all for tuning in. And you guys, hope y'all have a wonderful day, man. If y'all got any questions, DM me. But just think bigger. We thinking bigger. We thinking bigger. No more just sharing everybody else, but we sharing their stuff. Of them buying these companies and The Rock buying XFL and the UFC and Facebook and Amazon. But we're sharing this with intentions of someday owning our own companies together. That's the goal. Owning our own companies. Everybody's okay with doing the bare minimum. Well, we want to go above and beyond. They say aim for the moons and at the least you'll land amongst the stars. I hope you guys enjoyed this live. I did. And we do this every Sunday. And if you know somebody who has a dope business that's running on Wednesdays, we interview founders who have businesses. Tune in, tap in, and we'll get you guys together. I hope you guys have a wonderful day. Thanks for listening to my live. I'm out of here, man.